Why have we seen miners outperform stocks this summer? Well, we have Frank Holmes, CEO of U.S. Global Investors, back with me in studio. Frank, good to see you.
Great to be here.
Yeah, it's good times for the fund.
Yes, gold's up, and Fashion Week is now. I see things lots of gold in the Fashion Week.
That's right.
So it's an interesting theme.
Lots of gold on the streets of New York City right now. Frank, let's talk about the flows you're seeing into your fund right now. Do you feel that it's a sign that retail and institutional investors are finally embracing gold? How do you see it?
Institutions have, because what we've witnessed is Newmont and Barrick's multiple to revenue has expanded a lot. And so that means non-gold fund managers have been piling into those gold stocks because they're big liquid names. You're seeing the retail speculative money has not really come back in a little bit, but that element. So our big active gold funds, there's fund flows, but they're spotty.
Frank, would you not agree that we're not seeing the money flow back into the junior space yet?
That's true. No,
why not?
It's spotty,
right?
Because I guess a lot of retail people. I know in Canada, the regulatory world's made it very difficult to go after the person in their 60s to say a broker would say you should speculate in this gold stock. Under the fiduciary rule interpretation, they don't do that. So 80% of the brokers controlled by big banks, they don't want that. So therefore, all of a sudden, that flow.
And what about, do you still feel the money, if we're looking at the junior space, is still going away from it into cannabis, especially in Canada, into the cryptos? Are we still seeing that?
Well, the cannabis has had a difficult 6 months. So there's been a big contraction in multiples in the cannabis industry. And something we can't be involved with because we have U.S. funds and we just don't touch that. We don't invest in it. But when it comes to seeing the speculative money in gold, there's much more interest. There's many more clicks to our website. We look at every week the investor alert, which we publish and goes out to 50,000 people in 180 countries. Well, it's growing. And Frank Talk is growing. Right.
Well, absolutely. I agree. Like, we absolutely see and feel the energy back into the commodity space. And now, Frank, looking at a global view here, what events are you really tracking that you feel could move gold? Is it the situation in Europe? Is it U.S.-China relations? What are you really tracking?
Well, we always talk about fiscal policy, monetary policy imbalances. And when you get a big imbalance, gold seems to perform. And that's what it's doing, is saying to you that the trade war is a fiscal policy. Rising tariffs is rising taxes. Rising regulations is basically a tax on the economic engine. So we have not seen a real decrease in fiscal policies globally for trade. Actually, we see things escalate. And the solution has been, well, we're going to have to go to the monetary guys over here, and they're going to turn around and go to zero interest rates, or in Denmark, pay you to take out a mortgage. Negative interest rates, the number of government bonds is growing. And when you do a forecast in the U.S., I think in 6 to 9 months, it'll be 100 basis points less in the U.S. What does that mean? That would propel gold to 1,700 to 1,800.
That's the forecast you're looking at.
Yeah. Because if you look at inflation rate, if it stays at 180, it goes up to 220, 230, and rates drop 100 basis points, gold goes to 1,900. When gold hit 1,900 in 2011, the 10-year U.S. government bond was minus 3% yield, minus 3%. Gold fell to 1,000. Why? Inflation fell and real interest rates went up. So now you had a positive rate of return of 200 basis points. That 5% real rate of return swing moves the price of gold around. Well, it's pretty ubiquitous all around the world. It's drive rates down, do whatever you can to stimulate economic activity. It's devaluing the paper money everywhere in the world. And so I think the case studies of Venezuela is a classic, Argentina now. So those countries, gold protects them.
I remember when I started in the business, talk of $1,000 gold was crazy. And I think I entered when it was around $790. What about talk of $2,000 gold? So is that, you mentioned 1,700, 1,900.
10,000.
That's not nuts for you.
No, I think it goes to 10,000. I don't think it's going to happen in the next 12 months. But I think that the supply of gold, peak gold is there.
Wow.
The supply of gold is not growing.
Okay.
GDP per capita is still strong in China and India and Southeast Asia. 60% of gold is bought for love. and that's a steady consumption of gold. Russia buys all their gold because of the open capital markets that buy more gold. China, same thing. So we do have a paradigm shift. And so to recognize that the gold traders are no longer London, they basically are the price makers.
Yeah.
The Chinese are the price makers. They used to be the price takers. And that is a paradigm shift.
You know, talk of $5,000, even $10,000 gold. How ugly is that world, though? That price of gold lives in. Does it have to be get to Armageddon state?
Yeah, that's Armageddon is if there's a war. That's the Armageddon. No, it's just a slow debasement of currencies. Art was going to do exceptionally well. Real estate. What's the best asset class for the past 20 years? Morgan Stanley came with this big research report. It's been real estate. What's the second best asset class for the past 20 years? Gold.
And no one talks about it.
Nobody talks about it. Except for the Ray Dalios, who was the biggest hedge fund in the world, and they have between 6 and 10%, and they're always recalibrating.
Frank Holmes, thank you so much for joining us in studio here in New York City. Come by more often. And thanks for watching. We'll have much more for you on Kitco.com.